Is this 2000 for tech and crypto? Want to ask Victoria Greene, Squared Private Wealth CIO. That's our question. Is it 2000?
I mean, for some sectors of the tech market, absolutely. It's 100% a bubble that's bursting. And I hate to pick on the Cathie Wood-esque stocks, but the ARK fund is like the poster child for what this bubble is about. And this bubble is hitting the stocks that really don't have current earnings. You know, you're investing in future innovation. And those are the stocks getting hit the hardest. You know, you look at, say, a Coinbase, a Teladoc, a Peloton, a Zoom, all of the pandemic darlings that are now kind of pandemic duds. Those are being hit the hardest, and definitely the baby's coming out with the bathwater, as you guys talked about with the Apples, Amazons, and those guys that have billions and billions of earnings and cash flow on the balance sheet. But yeah, it's certainly a bubble. You know, crypto is a bit scary right now. I think some of the crypto sell-off has to do with Coinbase saying everybody there might be an unsecured creditor. That may be causing some forced selling from people that are kind of panicking out of Coinbase, but don't really know where else to go, so they're selling.
Victoria, how did you position into this? What was the setup for you into this as you came in through the new year? How were you positioned? Did you expect anything like this to be occurring?
No, I mean, I wish I could have said I called a massive rollover. We were a little bit bearish. We were definitely value tilted, but we didn't think it would be this ugly. I did say, you know, the Fed is wrong and late. And so this doesn't surprise me. And the poor Fed, they never get it right. It's a thankless job. They're either too early, too late. They don't communicate well enough. They over communicate. They're never hitting like the sweet spot of doing it right. So value is definitely where we want to be. You know, one thing we're watching is if we're going to see that 38.15 hold on the S&P 500. You know, it's the mantra right now is quality and cash flow, dividends, balance sheet, and boring. I think right now we're just all trying to kind of survive. At the end of the day, yes, we do see a recession coming. It's going to be more mild. You know, generally speaking, there is strength in the U.S. economy, but I also think the world is shrinking. You know, you've got Russia coming out of the markets. You have this commodity pressure, and there's just generally so many headwinds. And typically equities, you know, can rally up that wall of worry, but I think there's too much. And earnings season didn't save us, even though you had pretty solid earnings come in. And I don't think if you're looking at the Fed to save us, I don't think they're coming to save us. They've got to hike. And so I think people look at that as this outlook like, oh, the Fed, the market's terrible. The Fed's going to, you know, kind of come more and more dovish. And I think, look at the numbers on the inflation print. They can't. The Fed is not saving us here. Don't fight the Fed.
Yeah, it definitely seems like that put is well gone. Okay, so let's talk about the capitulation scenario. Many are saying we haven't seen it because we haven't seen the broad-based selling. Consumer staples is still holding up relatively well in comparison. But that's kind of where you said you want to be. So if we're waiting for the capitulation that's going to hit value hard, how do you manage it?
I mean, they've got to roll over. I don't think it's going to roll over as hard. Obviously, that's what we want is a 90% down day. And for all of the market to just sell off equally will be our capitulation moment. I think energy and staples and quality, you're going to weather it well. At this point, like I said, this is kind of a game of survival, but I still think that's the best part of the market. You know, if everything's being dragged down, I want to own the best of breed that I can. You know, I'm avoiding what I call right now, we want to position and avoid landmines, right? So let's not make sure we don't have a Zoom or a Peloton or a Coinbase in our portfolio that are just going to go terrible. You know, we may have some of these guys have down days, but we have a little bit of protection and quality and dividends. And again, this is a head down survival type market. And eventually we are going to be a buyer. You know, at some point we're all sitting around waiting on capitulation, and there will be a buy opportunity at some point.
Okay, so let's talk about what that looks like. I'm just going to point out that tomorrow's Friday the 13th in terms of kind of just dates for your diary. What does that look like? You're sitting on cash right now. Do you sit on your hands? What are you doing with that cash? Do you do anything with it at this point? What kind of an opportunity do you think is going to be opening up in front of you if you have a lot of cash to deploy?
So first, you should be sitting in some short T-bills because with rates coming up, they're actually slightly attractive. Make yourself a little bit of money, not inflation-esque money, but at least something. And then not to be that boring person, but there's nothing wrong with a little dollar cost averaging in a downward bear market, right? Very hard to know exactly where this bottom is. You know, I think you just maybe call capitulation day on Friday the 13th. Everything's going to be down, what, 5-6% tomorrow, and then we'll be done. Call it and rally off of that. So. You know, you have to be careful right now. I think the most important thing is investors understand their cash flow needs. If you can wait it out and be patient, You know this is going to come back. You know, I always say the four most dangerous words to investors is this time it's different.
Oh, yeah.
It's never different. It's
Yeah.
never different. It always comes back.
There's like a real life lesson in that too. Hey, Victoria, before we let you go, I just want to get your take on the crypto contagion and if we're seeing some kind of like deleveraging the crypto space affecting other assets. Like walk me through what you're noticing there.
Yeah, I think everybody's trying to understand exactly what crypto is supposed to do for us. It was supposed to be an inflation hedge, and that's not happening. So I think you have some people kind of gut checking in what is crypto supposed to be doing in my portfolio? And if it has the same correlation and volatility with NASDAQ, why am I not just owning the stock market? You know, and what is this asset class? And I think people are kind of grappling with that. I also think, look, it was a fun trade. Everybody loves the fun trades, and they felt like the FOMO hit a lot of people to go into crypto because we had these crypto millionaires, which I believe now might be crypto thousandaires at this point. But you've got to make sure that, yeah, I think crypto still needs to figure out what it's supposed to do. I mean, the blockchain obviously is a very valuable technology, from everything from infrastructure to industrials. There's no doubt that's a fantastic. Sorry, I just had a brain fart there. But the tech, the fantastic technology. Yeah, I just completely zoned out. That's a
Yeah,
great
no,
thing.
I feel your pain. We understand completely. Don't worry.
But yeah, what is crypto in your portfolio? At this point, it's not an inflation hedge. I feel like you can fairly definitively knock that one off your list.